Thanks for stopping by my market report. My name is Mike, and this market report is about mortgage rates, what goes on a daily basis, what impacts them, whether they're trending, if they're going up or down, if they're going unchanged. And we don't get into so much into rate quotes, primarily because these are too many variables that go into it. You could almost have a separate video for some along that line. However, if you'd like to have a rate quote, a personal rate quote for yourself, please feel free to reach out. A little bit about myself. I am a loan officer. I do work with a national lender, so we do loans in all 50 states. I could certainly help you with that. If you're looking to refinance or purchase, we can help you with your pre-approvals and help you finance your next property, as well as come up with solutions for your refinance. Or if you got just simple questions in regards to mortgage loan programs and different things of that nature, please, again, I'll be more happy to answer what I can for you on those. So without further delay, why don't we jump into the economic reports and see what's affecting rates today. We'll start with the ADP. This is normally sent out Wednesday before the BLS, but because we had a short week this week, they released it today. So back in April, we had 742,000 new jobs created. However, that was revised actually lower, down to 654,000. So we actually had almost 100,000 less jobs created for April on that one. Forecast was calling for 650,000, but it came in much higher at 978,000. So the markets are really liking this number. However, the big report this week will be tomorrow from the BLS, or Bureau of Labor Statistics. That will be if you recall last month, it was very disappointing. We'll have to kind of wait and see. There has been a disconnect between the two, so it doesn't always correlate. So we have to kind of watch and see if tomorrow will bring in a really hot jobs number or not. We also got the jobless claims that we get every Thursday. So last week's report came in at 406,000. However, that got revised slightly lower down to 405,000. Forecast was calling for a lower, keep that trend lower at 390,000. However, it did come in even lower than that at 385,000. So good number there, broke the 400,000 mark. So we're now lower than that. However, these are two things that are a little concerning that we don't really touch on part of it. The continued claims. So last week we had approximately 3.6 million people with filed continued claims last week. Excuse me, was actually revised higher up to 3.78. So we actually had about a little over 100,000 more people applying for continued claims, and that ticked up even higher this week's report at 3.771. So a little bit higher on the continued claims, so more people are staying on it. Challenger layoffs. These are basically announcements of layoffs coming ahead, and that jumped up by quite a bit here from 22.9 up to 24.586. So we had a pretty big jump right there in terms of layoff announcements for layoffs by the Challenger. So these are two things that we need to account for that the media really is kind of downplaying. They're basically looking at these two numbers and not kind of touching too much on the Challenger or the continued claims. So let's continue. We got the labor costs. This is the final revision for labor costs for Q1. Same thing with productivity. So with labor, the last report came out at a drop of about 0.3%. And forecast is supposed to drop a little bit further down 0.4%. However, that jumped up to 1.7%. So quite a big change there. So here we thought labor costs were going down, and actually went up. And it was a pretty big jump in the other direction. Now, productivity went from 5.4. We thought maybe it would go up slightly to 5.5. However, it remained unchanged at 5.4%. Last but not least, we got the ISM non-manufacturing or services industry PMI for the month of May. So in April, it's at 62.7. Forecast was supposed to have an uptick to 63 and exceeded that to 64. This is the highest on record for this. So this is pretty high. We're also hitting in the season where services industry will pick up. And this is obviously a very good number right here, the 64. Again, it's the highest it's been. I think this report started coming out in 2009. So for a long time, this is for a little over 20 or a little over 10, 11, about 11, 12 years since this report's been out. We've never hit this mark here. Let's jump ahead. Take a look at what's going on with the headline news. Stocks are mixed. Dow actually started off way down and then kind of rebounded and has since rebounded and now is in positive territory. The other two indexes are S&P and Nasdaq are in negative territory. We had the Fed base book come out yesterday afternoon, and they were kind of talking a little bit about that, kind of showing that there are some moderate growth going on in the economy. However, again, it did talk about the uh, supply chain being holding things back, the materials and labor coming back. The concerns about that is to get these things back, it could create transitory inflation, as the Fed indicated. And the Fed has talked about, like as we mentioned, they are willing to start talking about tapering. Not so much yet, but talking about when in the future they may start talking about it. So again, most people I think are looking at towards end of summer, early fall, when the Fed might start considering tapering, or at least when they at least start talking about it, and they want to give some months in advance notice versus just doing it right immediately. So they're going to watch, obviously, the numbers we're looking at. Jobs data is going to be a very big thing they're going to watch for. So watch for tomorrow if it's going to come in at a hot number, and we'll probably want a couple of months or so uh, as indicator if this is still on that path. Let's take a look, see how this is playing out with the bond market. Bond market is down a little bit today, so the stock market went down a little bit, but we came back. So the hot jump number came in today, kind of is what kind of was the one that kind of put it over. So we're down touching the 50-day moving average. We're down about 14 basis points. This initially, most lenders didn't come out with worse pricing. Came out with unchanged. However, as the morning went on and this declined further down, lenders started repricing for the worse. So we're in a area now where lenders will reprice for the worse right now as we approach the 50-day moving average and down, over 12 basis points here. Yields are up. It's also trying to work its way back up above those three layers here, the 25, the technical, and the 50-day moving average. We're just a hair under 1.63 right now at 1.628. All right, so unfortunately, rates did worsen a little bit today, and we'll see what tomorrow brings. Again, tomorrow is a jobs report, and it could come in hot. It's kind of hard to see what we're gonna know, what to expect from it, but keep an eye out for that. All right, folks, have a great rest of your day. Thanks so much for watching. Much appreciated. If you guys like these videos, please smash that like button. It certainly helps out our channel and gets the word around. And we'll look forward to see you guys tomorrow. Bye-bye.